JB here. Hope everyone's doing outstanding. Tuesday, July 1st, 3:48. It's gonna be a really quick rant. Sorry, I had some issue with the audio. I'm trying to get the charts up. Uh, Take a look at the S&P. Actually, back into the green here into the afternoon, near the close. Got about 12 minutes left. 618.55 here on the SPY. Another tight trading range. If you're watching intraday, it almost there's swings. It's like it almost seems bumpy, but then you look at the daily chart, it kind of you pull it back. It's like, oh my gosh, here we go. Um, so we have the tax bill passed the Senate, goes to the House tomorrow. We'll see how that all plays out. Not much else in the way of gyrations. You had POTUS comments today talking that Japan's not gonna, it's probably not gonna have a trade deal. There might be 30% tariffs on Japan. Who knows what that looks like? But it almost seems like, I was saying it last week too, especially with the Canada news last Friday. It's like the market's numb. Seems I wouldn't even say numb. It's like it doesn't react like it used to on these trade war deals because it's almost like number one, it seems like the high numbers are just there to get better deals, right? And then number two, it seems like it all gets resolved anyway. So it's like the market's pricing in deals with all the countries, and hopefully it works out best for uh, not only the U.S. but the global economy, and I think that'll bode well. So it's got overall markets. Interesting things here today. It's funny, I was talking about the small caps. I don't know, it was like maybe it was yesterday or Friday. Uh, that at some point you have to think they got to start to outperform. And I'm the optimist. Maybe I had it on the watch list this morning. You have to think that at some point the small caps might be able to lead the market for the next leg, right? It doesn't mean that the S&P has to rally in tune, but maybe it chops around and small caps take the baton for a little bit. So rotation. So you saw small caps rallying this morning. I didn't see anything much of interest, and you would think, more chatter around, Powell, and he was talking at the central bank meeting in Portugal. Uh, but yields are higher here today, so that, it's not that. I mean, it just felt like, hey, the Nasdaq was pulling back and small caps were rallying. So maybe that's I wouldn't say that's going to be the pattern, but we'll see how tomorrow plays out as well. But the Nasdaq's down about a quarter percent, three quarters of percent. Small caps are up, still over 1%. So maybe that's a trend over the next couple sessions, which I like because a lot of names that I trade are small caps. All right, so that's kind of like overall markets. We don't have much again in the way of headlines, or I mean, in the way of catalysts outside of the headlines, the tariffs, trade deals, and the tax bill, right? And the T's, and I think the T's will continue to rule the market here for the next couple of days. But I'm like, what can really shake the market here? You already have the ominous, people keep talking about this huge deficit and $3 trillion, whatever it is, but it's like the market seems like almost the market doesn't care, and like this unsustainable debt situation. It's like it's not like it just came out of left field. Like it's been there forever, for as long as as I can remember. Kick the can down the road. You can go to the OM website and some articles UPB used to write back in the day, like 2012, 2010. Kick the can down the road. That's all they've been doing for at least the last 15 years, much longer. But hopefully that at some point you either got to get more tax receipts by growing revenue, right? Or you got to cut spending or do both, right? And if you can do both, great. And then that'll get the deficit down. And then the other way, obviously, is you pay less on the interest payments. So you get the payments down, which stronger US dollar helps, lowering yields helps. So hopefully all those things together can finally hit that, because it's a little different when you have a momentum stock that's a high growth name that has a lot of debt, and that's unsustainable. But when you have an economy, the number one economy in the world, that's a problem. All right, so that's overall markets. And what's funny? I keep talking about the wall of worry. I forgot about the Fitch downgrade, right? U.S. debt credit rating downgrade. That another item of the wall of worry. All right, so just really quick on individual names. First, Apple out of the gate rallied. Actually, didn't rally right out of the gate. It was like 207, then finally spiked all the way up to 210 by 11 o'clock, and then it's been chopping around ever since. I didn't want to see the premiums come out of the calls, and they weren't moving. The 212.50s weren't moving as much to the upside as I thought they should. So I went and closed the rest of those out for 100%. So nice trade there. And then I went and rolled out into the 220s, because I think if you look at the chart, it's over its 50-day moving average. It has a tight Bollinger Band setup. It's been chopping around for the last almost month and a half, 2 months, I guess you could say. If you go back to earnings and the surprise on the Siri update where they say, hey, we're not, possibly not rolling out the AI until 2026. So now, if that's some of that headwind is alleviated, or at least the possibility that, hey, Apple's going to have a sense of urgency and get this resolved quicker, either by acquiring the technology or licensing or whatever it's going to be. So I think that bodes well, and so I got the 220s. And not only that, you take a look. This over the years, I remember lots of negative catalysts that have happened with Apple, and at some point, it just starts to go on a run. And I think this could be the start of it. So that's kind of Apple there. I'll continue to hold those. RH finally got some RH spec calls that paid out, right? And I think some of it has to do with the small caps rallying. Wayfair was going up too, but that was only up 4%. Restoration Hardware was just soaring. So it was once it broke over 200. I was watching, and I finally pulled the trigger. I was looking at 215s. They were like 45 cents. But I'm like, you know what? If it doesn't go, I don't want to pay that premium. So I went further out because I figured if it rallies, it's not going to matter if I get to 215s or 220s. Uh, they'll all be nice multi-baggers. So I got to 220s, and then within about an hour or so, I was able to close some out for over 200%. And then I held the rest. And of course, it goes from 209 and sitting here at 198. So a quick $11 reversal, still up 5% on the day. And we still have another day and a half of trading. So I don't think it'll take much for it to continue. You take a look at the chart, similar to Apple, tight Bollinger Band setup, and you have, I wouldn't call it a gap fill, but you have that earnings move to over to near 230. I think it heads back up there in the coming days. So that's RH. And then Lemonade, look at the daily chart. Actually doesn't look that bad, but it's disappointing because it had such a great start to the day, all the way up to nearly 48, and then just gave it back. And, it happened quickly. Uh, so, I went and got some strikes into next week. Actually, so I had the 50s last week or the week before, and I locked those in for nice games. And then I have the July 18th 55s, which I locked in half to cover costs, and I've been riding those. And then once it started to break out, it's just only a matter of time before this goes on squeeze 2.0, I guess you would call it. So I don't know if it looked like I thought maybe it was gonna be today. That didn't pan out. Maybe it's tomorrow. Maybe it's Thursday. So that's the thought process there. Reddit's back into the green here. Reddit all the way to 156. I was going to close some more of my lottos out, but I'm like, I think it trades 165 plus this week. So if that's my thought process and that's what I'm convicted in, then why should I take some more profits off? So I'll just continue to hold those. Um, Disappointing Joby. It seems like AVAV, Archer, and Joby are all down big today, and thankfully Joby's down not as much as the other two. AVAV down 12%. I don't know if it's spending bill, geopolitical tensions easing. I mean Joby's not a war name, but um, disappointing. But I'll continue to hold my strikes there, and it's still optimistic. And I think that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.